Welcome to the Pump and Dump channel for another video, this time looking again at the theoretical model portfolio. So getting into the stocks I'm going to be transacting in, let's say, for the model portfolio. CNX Resources here, it's going to be a sell. Reason for that is I looked at the earnings report, looked at the earnings call. I kind of computed everything and I came out with a result of $9.99. That's the fair value. It's not near my 11.05 that I thought it would be at. I kind of didn't see anything that led me to believe that that's where it should be. And I think I might have underestimated the impact of CNX Midstream being merged into CNX Resources, and as a consequence of that, I kind of got I got a bad result, let's call it, the other day. But it was still the correct call to buy it. The upside was there. The sentiment has got to be, appreciated. Natural gas has been bullish the last couple of days, and CNX Midstream, the assets of CNX Midstream, the processing and the transportation of the natural gas and other fossil fuels that CNX Resources produces, that is really a stabilizer for the company. It kind of is an asset that maintains its value regardless of what oil and gas prices do. It's more relating to volumes, you would say, in terms of how much they save or how much they generate. And with the acquisition, of course, the stock has become less volatile. So if the natural gas price fell, it would not take CNX Resources shares down as much as it would do before the merger, and it of course wouldn't take it up as much as it would do. But yeah, that's something where I guess I may have been slightly off and miscalculated. That's the truth. Noble Energy here, buying it back. The rationale for this is I am still of the belief, as I mentioned in the video a couple of days ago when they announced the merger between them and Chevron, that I think Noble Energy shareholders will ask for a better conversion ratio of 0.15 at least, and if they get that, then this will be a $12.59 a share stock. Next, here's Safe Bulkers and Diana Shipping. So Safe Bulkers I bought in the theoretical model portfolio here on the 19th of June at 128 or 129, I can't remember, and it's at 133. It's looking like it's bullish and wants to break out, but I have to look at in terms of relative value, and I'm looking here at Diana Shipping. Diana Shipping on the 19th, it was at something like 180 or 170, 180, whatever, and now it's at 139. And I have of course the math of what I think they should be worth, where they should be at, and that may be a little bit off at this point in time. But in terms of when I'm looking at this, when I do the analysis, it's kind of valid for the year. And when I'm looking at Safe Bulkers, the upside is much less than it is with Diana Shipping. And that's maybe because of the fact that Diana Shipping has lots of Cape-size vessels, a lot more Cape-size vessels as a percentage of its fleet than Safe Bulkers has. They have more of the smaller, the Panamax types of smaller vessels, right? So here it was really a question of the composition of the fleet and how it is priced and what one would expect these two companies to earn. So making the transactions here, I've updated here where my 1 year target is. I need to update it here too. Oops, I'll do that later because I've prepared all the transactions. I don't want to undo everything, so I'll do that later for this one. So selling CNX here, 1,170.60, buying Noble there, and then adjusting the shares to 0, getting the shares for Noble, which you can see here's the amount divided by the price. Doing the same with Safe Bulkers, adding Diana Shipping, and then taking out the amounts here from the sale proceeds. So you can see here quite clearly that when I bought them, 2,000 I put in, I get 2,062 out, so my profit should be that. With CNX, Snowball, and the others, it will be the same. So I also updated some symbols up here, not very important. So 1259 is where I think this should be at. With CNX resources, it should be here at $9.99. So as you can see here, it's the way it is. Nothing really major has changed. The overall portfolio is up less than $100, like 1% over a month and a half. Not very impressive, I will admit, but there are some things that went unexpectedly. Of course, like when I'm looking at African Gold Group, when I looked through the technical study, I found some items that bothered me, and it is something I talked about last year. I think it was when they had I can't remember if it was in October, November, September, somewhere around there. They made a conference call, not a conference call, like a presentation call where you could call in, and I didn't call in. And I remember back then, I think I made a video actually about it. I'm not 100% sure now anymore, but I think I did make the video about it, about the environmental impact study assessment, because initially, when they had all the permits, they said they had a permitted project, which was true, but when they scaled up the project, the key is that you've changed the project, you have a bigger size, so obviously you need to get permits for everything again for the new project. And at that point in time last year, I was thinking about that was an issue, and that would be holding it back. And I thought they would work themselves through it. Everything was looking good. And when I was reading through the technical report and I was doing some more research, I came to the conclusion that it's unlikely that they'll be able to start it in Q4. And a reason for that is that they need to meet with the community representatives to get kind of like the go-ahead from the chiefs of the community, or whatever you want to call them, to start building this project, and that they agree with it, because of course they talk about creating jobs and all these things that the people in the community want to hear, and how it's going to benefit the community as a whole. So in order to get all the permits, they need to kind of meet with them, and then they need to get kind of this paper where the community where they're building this is kind of agreeing that they want it to be built, and then they can get their permits all together, and then they can start it. And they can't start doing that because, as it is mentioned, they kind of need to meet physically with the people of the community, and then when they have met physically, they get the paper, and then they can go to the Ministry of Mines and say, we want to build this. Now they can't do that obviously because the government of Mali, like most other governments, have put in restrictions on people meeting, so they can't meet up because of the coronavirus. And as a consequence of that, it's unlikely that they will get this until this coronavirus story is over. But that is, something that might be able to be worked around. Maybe they can actually just set up a conference call, give those people some computers or something, so they can have like a virtual meeting, or find some other way of doing it. And in the event that they manage to meet up with them, then things should kind of move along and get done. And this is something that's typical with these mining companies. Everything always takes longer than expected. So they managed to raise $10 million. I think they announced it yesterday. They wanted to raise 5, but they were oversubscribed because gold is hot and everyone wants to put money in. So they raised money at 25 cents a share, with warrants at 40 cents. And I looking at it as it is, as still an exploration stage company, because they're not in development, they don't have all the permits to start, and they haven't like announced that they are starting to build it. So given that they're still in the exploration stage, I think the shares at 25 cents are probably priced correctly. And the reason for that is that with the proceeds, they want to kind of upgrade the reserves from 760,000, I think, to like 1.2 million. And if they achieve that, then the fair value as it stands would be about 50 cents Canadian. And once they get to the stage of construction and all their permits, everything together, and it becomes re-rated as a development stage project, the discount rate will drop. And with the discount rate dropping and the current gold price, the number of shares they have outstanding, the warrants and so on and so forth, my target is about $1.82 Canadian cents. So there is of course some things that have to come together to achieve that. So I guess that's what I'm holding it for. It's unlikely it's going to be achieved by the end of the year, so I have to kind of make a decision here whether I'm going to downgrade my 1 year target price to 50 cents or leave it at 182 as I think it should be right now. And for me personally, I think that there is a chance that somehow they manage to get to the construction stage, so I'll leave it at that. But even if I downgrade it to 50 cents, I still think it's good value as it stands, at having bought it at 33.5. So I wouldn't necessarily feel like compelled to have to average down, as long as the upside is there and the price is still within reason. Of course it's very volatile. It's down like 4 cents, about 10%. There's still some case to be made that this will be able to achieve that amount. So anyway, apart from that, there's nothing really to talk about, I guess, for this stage of the game. So I'm going to leave it with that. And of course, always remember, this is not investment advice or recommendations to buy or not to buy any of these shares I talk about. I could be completely wrong about something, but usually, I have something within reason, a target which is within reason. Of course, this does seem a bit excessive at this point in time. I'm going to have to probably look at it again, see if my valuation is way off. But I think like maybe if it comes down, like 50 cents or so, there's still good value there. Anyway, I'm going to leave it with that. So remember, if you like the content, don't forget to subscribe and have a good day.